but it's really cool that, two, three people in a garage can build something that reaches out and changes the entire world.
And Manish, do you know why these startups were all HP and Apple founded in the garage?
I don't actually know why they're in garages. Yeah.
Well, you must have been to San Mateo before. It's the
Oh, yeah.
largest room in the house. That's why.
Oh, is that right? I
It's
did
the
not know
largest room
that.
in the house. These houses, man, they get tough and tight and expensive in the Bay Area.
Oh, I love that. I love
It's a
that. Yeah,
joke,
I
but
mean,
it's probably true. I mean, think about like I remember watching the movie about Super Pumped about Uber. Did you see
oh
that?
yeah, I haven't got around to watching it, but I know it. Yeah.
Get around to watching it. It's pretty good.
Okay.
Like they have a scene where Travis is in the office of Cook
Yeah.
in at Apple, and he's like, "Why should I not kill your app
Oh
and
yeah.
kill your company?"
Yeah.
And he's like begging on his knees to Apple, allow my business to operate
Mm,
on all the iPhones.
mm,
And it's just like that is beyond emperor power.
right.
And it's insane if he's taking 30%
Oh yeah.
of everything. Like
Totally.
a 30% tax, like you
That
get
yeah.
free healthcare in Denmark. What's
Right.
up with this?
Totally. So that's
Are
the
you
other one.
okay with
Like,
that?
no, so I like the global side of it. I like, right? It protects, I'm for it. On the other side of it, though, this is kind of the domestic side, and this is where I sit as a venture capitalist, right? So I think that there is monopolistic pricing power that is happening, that it does stifle innovation. And I think we need to actually be much more precise about how these companies operate. But I think it's hard because I do think generally regulators don't have enough, they're not sophisticated enough to police the Googles, the Open AIs, the Apples of the world. Like it takes a lot of deep understanding to understand how like the ad system at Google works, right? That is
Right.
not you can't just read a book and I'm like I got it, right?
There's
And
a
I think
big lag between innovation and Washington, D.C. regulators, like
absolutely,
a huge
absolutely,
gap.
yeah,
And that in itself is a problem.
it's a huge problem. And I think the other thing is
Hello, and welcome to Fireside with the VC. My name is Andrew Romans, and today I'm with Manish Patel, who is the co-founder of Nava VC, which he recently founded. Manish, was it 2021?
right, 2021, Andrew.
2021. So we're going to get the story, and he's got a fascinating background from even before then. So, Manish, welcome to the podcast, and maybe tell us the story about how you got going into venture and what happened before 2021. I think Fund One is a $200 million fund. That's
Yep,
tough
just under it.
for every
175.
civilian off the street to pull that down. So maybe give us your background before Nava.
Yeah, well, Andrew, thanks for having me. Excited to be here. A big fan of the show. Definitely the accidental venture capitalist. So, if you asked me when I was 18 years old, when I first came out to the Valley to go to school at Stanford, would you ever want to be a VC? I would have said, absolutely not. Like I would drive by Sand Hill Road and be like, oh, what is this like magical weird place? That's not for me. I want to go build stuff, right? I was much more in the homebrew computer camp, right? I want to go take apart a computer, build stuff, etc. And I landed in the job in my late 20s. And it's amazing. I mean, it's such a humbling job every day to work with entrepreneurs and help them, not just from a capital perspective, but from a network reputation. It's incredible. And if stuff works, not only is it lucrative, but you're helping somebody build something that changes the world. And sometimes I think that gets lost in the sauce of all the stuff around valuation and money, et cetera, and venture capital. But it's really cool that, two, three people in a garage can build something that reaches out and changes the entire world.
And Manish, do you know why these startups were all HP and Apple founded in the garage?
I don't actually know why they're in garages. Yeah.
Well, you must have been to San Mateo before. It's
Oh
the
yeah.
largest room in the house. That's why.
Oh, is that right? I
It's
did
the
not know
largest room
that.
in the house. These houses, man, they get tough and tight and expensive in the Bay Area.
Oh, I love that. I love
It's
that.
a
But
joke,
yeah, I
but
mean,
it's probably true. I mean, it's a joke, but it's probably true. Like,
I would believe it. But to me, it's so cool. Like, when my first year at Stanford, I came out to school. I was lucky enough to get a scholarship to go to Stanford. And I grew up in
nice.
rural Kentucky, of all places, outside tobacco fields. My family is originally from East Africa, Uganda. And so I had this kind of weird journey that kind of ended up in America. And, when I got to Stanford, I was like, oh my God, it was like right after the first dot-com bust, 99. And it's like, technology is amazing. Going back to this idea of like two or three people in a garage, I was like, wow, there's this company called HP that these guys in like the Great Depression built that like created Silicon Valley. that's kind of bananas, And then Apple, to your point, right? Like Wozniak and Jobs and what they did, and then just over and over again in like the Yahoo days, like seeing the trailer where Yahoo got started on Stanford
And that's a
campus.
Stanford story. Yeah, yeah, yeah.
So all that stuff was just so exciting for me. That's where I was like, being kind of a geeky kid, I was like, oh, technology. Well, this is cool. Like, what is this about? So Stanford was just an amazing formative experience for me. And then, fast forward many years later in 2015, I joined the faculty, and it's been awesome just to give back to the university. I teach in the School of Engineering Design School, and just,
Oh, wow.
seeing the energy and the entrepreneurship, and just, it's just incredible and so invigorating, right? So I really love Silicon Valley for so many
Hey, Manish,
reasons.
are you an adjunct now, or are you teaching, or did you teach a class and stop teaching a
No,
class?
no,
How's
no.
that
So
working?
I like to say I'm a fake professor. I'm not really a professor. I'm a
Okay,
adjunct
you got to make
lecturer.
everyone call you professor. When I was a professor at
Yeah.
Chapman, and they first started saying, "Hey, Professor Romans," I'm like, "That's right, damn it, you can't call me Andrew. I like being called professor." It's like
I feel
I
so
didn't go to
old though when
Doctor
my
Evil school not to let you call me anything but doctor.
for me, I feel so old when they say I'm professor, because I'm like,
Oh,
wait a second.
really?
Yeah, I feel old.
Oh, that's funny. I love it.
Yeah. Yeah. I'm like, no, no, I'm not that old. Please don't, please, can you call me my first name?
I mean, I
But it's a
almost feel
lot
like
of
it's
fun.
awkward. I think it's awkward when your students get to call you by your first name years after they've graduated. Then it's like,
Mm.
come on, just say professor in front of Manish. I want him to
Uh,
know.
Yeah, yeah, yeah. No,
I'm just
I'm
kind
old
of
school like
joshing
that.
around. So
Yeah,
were
yeah.
you so it was 2015 that you started teaching that class?
I did. Yeah, yeah. So my journey was Stanford, lucky enough to join Google in the early days. I was a pre-IPO employee there. In the
Wow.
book of life, better be lucky than good. I think I said no like 3 or 4 times. And then some of my good friends had gone there, and they're like, dude, you gotta come here. You don't understand. I was
What
working for
years were
a
you
nonprofit.
at Google?
I was there from 2004 to 2010. So I joined right before the IPO.
Oh my goodness. Those
Yeah,
are some pretty creative. I mean,
yeah.
they were kind of last mover killer advantage business anyway.
Totally, totally. I mean, I think, it's funny because today we have multiple trillion-dollar companies in the world, like Google and Apple and Microsoft. If
Still
you would
blows my
ask
mind.
somebody back then, 2003, 4, 5, if you had said Google's going to be a trillion-dollar company, people would have been like, get out of here. You're bananas. Like, I don't even know if a trillion-dollar company existed at that time. I don't know, maybe Saudi Aramco or something, but certainly no tech company could have claimed we're going to be a trillion-dollar tech
Well,
company.
this is recent. And by the way, it impacts venture. We can bookmark this and come back to it. Like, what
Yeah.
does it mean that there are numerous multi-trillion,
Oh, yeah.
$3 trillion? I mean, you think about like Facebook using 1% of their 100 billion market cap to
Yeah.
stop photos from going to Twitter. Like
Right.
that was worth just to deep six it, you know?
Absolutely.
Now they could pay, now they some of these companies could pay 35 billion, and that's their 1%. I'm just going to kill that.
Yep. Yep.
It turned out
And
it was a creative, acquisition, obviously,
of
greatest of all
course,
time. But at the time, it could have been justified 1% of my market cap just to keep photos on Facebook and not going to Twitter.
absolutely. And I think that's kind of this interesting dynamic that's happening in the valley, is that these tech companies are very different than some of the, traditional industrial incumbents, right? They are pretty fast moving. They have infinite capital, right? And I have a lot of smart people working there. So, as a VC, while I do love Google and Facebook and all the and Nvidia, I think they do really interesting things for the world. It's also interesting where are they so big they can stifle innovation as well, right? Because a product manager at a Google could meet a startup and be like, oh, we're just going to replicate that roadmap, right? Or if you don't join us, we'll kill you, right? If you don't acquire us. And I think that's a different dynamic, which I think at the end of the day, I always think about. I love competition. I think it always creates better products for the end consumer. How does that play out over time, right? With some of these large incumbents, which are really different than, Standard Oil back in the day, you breaking up a monopoly, right? Like, what are the implications for that? On one hand, I'm excited because they're making these awesome infrastructure investments, building data centers, which allow lots of startups to build great things, AWS, etc. Right? On the other hand, I'm like, well, but will these startups be eaten alive? Will they ever really be able to get to scale? Because once they get big enough, they're like, we're gonna gobble you up, and you just can't grow anymore, and everybody gets paid out. Or do we copy that roadmap? What happens over time? So I think it's a really interesting time to be in tech in general.
Yeah, let's bookmark that because I
Yeah.
think I want to know what you think about antitrust of some of these kind of
Mm.
monopolies that we seem to have.
Yeah.
and what's best for society and the industry and everybody. But so you were at Google for those years. You probably did a lot of different things. What were you doing at Google?
Oh yeah. So I was one of the early product guys there on the product management team. I was fortunate to work on a few different things. So the early versions of AdWords and AdSense when that used to
Oh
be a
wow.
separate product, which was awesome. I was one of the early PMs on the AdSense product line and learned a lot about truly like tech and business because there's a lot of partnership work and working with companies like AOL when that was like a really important company to the world. I then worked on Google's TV initiative, started the Google TV team.
By the way,
Which
some
was
people,
awesome.
I think I mentioned like, Teague Savage from
Yeah,
Revolution. He was saying Google wouldn't exist if it weren't for us at AOL.
I agree.
Yeah, so you agree. He's like, I kind of grew up in a telecom family, and the whole idea that Steve Case could build a modem bank, access AT&T's infrastructure, and
Oh,
sell
yeah.
internet access, I'm like, talk about being asleep at the wheel. I mean, in a way, AT&T shouldn't have let they own the yellow pages. How did the
Oh,
yellow
yeah.
pages allow Google to even be born? They should have
Absolutely.
just, but anyway, so
No, but I
that's
agree
pretty.
with
So
that. I
working with
mean,
AOL, that's pretty cool. That's
yeah.
going way back.
Wait, this is old school, right? I have no hair, so I'm old, right? So,
Okay.
um,
You
but
got that Yule Brenner. You can't tell how old you are hair.
oh, it's
That's what
very
you
kind of
got.
you. It's my CGI on Zoom.
Okay. Okay.
But the early ads work, Google TV, kind of that I started that group with another amazing VC, Campbell Desai. I was on the consumer side, he was on the ad side, but that kind of laid the foundation for a lot of the TV stuff that came later for Google with like Chromecast and other projects. Google Maps. Probably one of the cooler projects I worked on. I love maps, big map geek. I worked on a project which basically Google had bought a fleet of airplanes to map the world, and I was lucky enough to be part of that team and be the PM on it. And they were flying airplanes all around the world,
Was that like
doing
Google Earth when they were making Google Earth? That's how they did that?
it works. So all that imagery, Google used to license that data, and then we decided to bring it in house,
Bring it
and
in-house, yeah.
then build up our own operational pipeline to go do it, from airplanes to camera systems to pilots, et cetera, et cetera. So everybody knows the Street View story, I think, and this was kind of the aerial version of that. Which was awesome, just being able to kind of work on all these things at just enormous scale. And that's what I loved about Google is like when they built really things that were global and infrastructure and at scale, like, yeah, Google should be the company that maps the world. That makes a lot of sense. I don't know if they should be building a photo sharing app that feels more of a startup play, but like, yeah, a large tech company that creates like a public good like Google Maps, that seems
Yeah.
really right to me. I also worked very closely with one of the founders, Larry Page, for a long time. I ran Google's corporate OKR process, sort of this KPI process. And that was awesome because it was a great top-down view of Google as it became the Google that everybody knows today. Kind of had the bottoms-up view as a product manager building stuff and shipping product, etc. So it was a really formative experience for me. Spent most of my 20s there. And the more distance I have from it, Andrew, the more special I realize it is. I'm sure you appreciate this. When you're in the thick of it, you don't know. People say, oh, it's a special company. It's interesting. When you're 23, you're like, I guess it's special, but I don't really
Yeah,
have
not
context,
everyone gets a massage on campus and
right?
cooking
Right.
classes, and it's a special place for sure, man.
It
Well,
was amazing.
I always try to get somebody to like, I have LPs visiting from Japan or Singapore or
Oh yeah.
Kuala Lumpur. They want a tour of Google,
Yeah.
and so like I always like do like the LP tourism of taking them
Yeah.
around on Google, and
Yeah.
I'm like, because normally I meet a guy like you on Google and we're just like have lunch and that's it.
Yeah.
Whereas like, I get this like someone's walking backwards showing us all this stuff. I'm like, holy mackerel, this is
Yeah.
beyond special. That
It's
AdWords and AdSense did something and made a lot of money.
it's incredible, and like I think also sometimes, in all the business school case studies of Google, the things that I think don't get talked about enough is like super smart people, incredible moment in time though, right? I mean, Google had the timing, the luck of life of like when it started, it was the 50th search engine or even more, right? Had a good idea, right? Like sort of page rank, a better way to do it. But it was also a time when you could just pull in so much talent because there weren't many amazing tech jobs around, right? It was like you can go work at Oracle, Microsoft, etc. It wasn't like there were like 30 other amazing startups you could work for like today, right? You can go to OpenAI, you can go to Cohere, you can go to a long list of amazing companies, right? If you're a smart person. So they had this unique moment in time where all these smart people had just come out of the dot-com bust and they were to pull them all together, which I think let Google operate at just such an amazing rate that other companies couldn't. And then, Bill Gross, Overture, coming up with that brilliant idea, right?
Like
Google,
Idea Lab, Bill
yeah,
Gross?
yeah.
Okay. Yeah.
He, coming up with Overture, sort of the original kind of one of the original online ad systems, right? Google saw that and made it better, right? They took it and made it kind of a little bit more efficient, a little bit better in terms of how it worked, and then it just took off.
Okay. Well, that's pretty interesting. I mean, it's funny. Sometimes, like, one of the startups that I've invested in,
Mm.
and I'm like showing it to my wife or something, and she does a Google search, it comes up like, no, don't click on that.
Yeah.
And it's like taking money out of the pocket bank account of our company and giving it to Google. I
Right.
sometimes look at like how their search whole thing looks and works, and I think
Yeah.
it's kind of evil. Like if the number one thing they're supposed to be doing is search,
Yeah.
it could be done a lot better. Like I kind of don't like the search of Google,
Yeah.
at that point. But what do you think about the idea that it's monopolistic and should be broken up into three different companies
Yeah.
or not broken up at all? When I first heard people rumbling, I mean, I remember, the pin that burst the bubble
Mm.
of the dot-com blow up was the announcement of the DOJ that they're going to break up Microsoft. They're
Right.
going to separate the operating system from the application. So like Microsoft Office being decoupled from the OS
Yeah.
of Windows.
Mm-hmm.
And that indeed, like according to Morgan Stanley, that's why an IPO that I was involved in got put on the shelf. And
Oh,
they said
interesting.
all bets are off and we're not wiring you the rest of the money that we had promised you.
Yeah.
And so that was like the pin. So I kind of like when people start talking about breaking up Google, I'm
Mm-hmm.
thinking, oh man, that is going to be a lot worse than a Putin invasion of Ukraine. This is
Yeah.
really gonna send a ripple through the system. But I don't know. I don't think it really would if it, right now, and the rumblings are already out there. What's
Yeah.
your view about, Amazon or Microsoft or Apple
Mm-hmm.
getting torpedoed with antitrust?
Yeah, I think I have kind of two lenses on it. From a global perspective, I don't think we should do that as kind of a US, as an American, because I think
Okay,
there,
so you're kind of saying laissez-faire, get out of my lane entirely.
yeah,
Just leave me
because I
alone.
think
And if the
if you
market
look,
lets me take this much on the App Store as Apple, then let me do it.
but also in the sense of, I think like if you look at like China, right, and WeChat and Temu and Tencent and all these sort of large companies that are coming to the United States, in some ways they've been accelerating growth because of the government, with government help, right? With Chinese government help. Like I want to make sure that as an American, that we have strong tech presence, right? And we have companies that we aren't sort of shooting ourselves in the foot and are then all of a sudden let somebody come in over the top from outside the US and then who I actually trust far less than US tech companies in terms of my privacy and my data.
Okay, so you're saying that like, province of Guangzhou or
Yeah,
Guangdong has got sovereign wealth funds that are
yeah,
funding
yeah,
Huawei, and
sure.
Huawei has an unfair advantage
Yes,
while we are, chopping the legs and feet off of our titans and
yes,
making it hard for us to even defend against Chinese.
yes, yes. So that's
I
one
mean,
lens.
when I hear people, sorry, when I hear people talk about like, should we ban TikTok or not? I'm like, well, they've banned Google and they've
Right,
got Baidu. They banned Amazon and they've got Alibaba.
totally.
They ban everything. And like they used to let LinkedIn because they were obviously doing deep packet
Mhm,
inspection and
mhm,
wiretapping everything. But now
mhm.
I've been told that they stopped doing LinkedIn. So it's like if they're banning everything of ours,
Yeah,
why is it that we don't ban anything, even this TikTok? Like
right.
I think it should be reciprocal. So I think if they ban us, it's like, like I've had American citizenship and British because I lived in
Mhm.
London for 10
Oh,
years.
actually, so do
Well,
I. So do
oh,
I.
do you really? Oh, fantastic. Bang. Well,
Right.
so like I remember going to Brazil
Yes.
speaking at some event, and it's like, oh, you need a visa. You got to pay $100 and get a visa as an
Ah,
American.
yeah.
And we wouldn't do it to you, but you did it to us. So we're just reciprocating that
Right.
100 visa. I'm like,
Yeah.
all right, I'm definitely coming in on the British visa,
Yeah.
which British passport, which just lets you in. So I
Yeah.
kind of say, like, look, we're going to ban TikTok starting at 4 p.m. on Friday,
Yeah.
and we will unban it the minute you unban all of our stuff.
Mhm.
So
Yeah.
you unban us and we'll stop banning you. And I wouldn't stop at TikTok. I would ban their everything that everything that they've banned of ours, it should be reciprocal. Now, you
Hmm.
could argue that they cannot allow YouTube and
Hmm.
see videos of Tiananmen Square, and
Hmm.
that's just never going to fly. I'm like, look, I don't make the rules other than reciprocation.
Yeah. Yeah.
So
I
you
mean,
don't
I
like
think,
videos about, you know, Tiananmen Square, then
mhm,
maybe you can get Google to ban those videos, but
mhm.
banning all of youtube.com, it's just not cool.
Yeah, no, I agree with that. I think it's just that like I don't think that's what I worry about from a global perspective. These companies are important assets to America. And as much as they do have their, issues with privacy, I trust them far more than a Chinese company in terms of how they're going to use my data,
Okay.
etc.
And what do
Right?
you think about, like, I remember watching the movie about Super Pumped about Uber. Did you see
Oh
that?
yeah, I haven't got around to watching it, but I know it. Yeah.
Get around to watching it. It's pretty good.
Okay.
Like, they have a scene where Travis is in the office of Cook
Yeah.
in at Apple, and he's like, "Why should I not kill your app
Oh
and
yeah.
kill your company?"
Yeah.
And he's like begging on his knees to Apple, allow my business to operate
Mm,
on all the iPhones.
mm,
And it's just like, that is beyond emperor power.
right.
And it's insane if he's taking 30%
Oh yeah.
of everything. Like
Totally.
a 30% tax, like you
That I
get
don't, yeah.
free healthcare in Denmark. What's up with this?
Totally. So that's
Are
the
you
other one.
okay
It's
with
like,
that?
no, so I like the global side of it. I like, right? It protects, I'm for it. On the other side of it, though, this is kind of the domestic side, and this is where I sit as a venture capitalist, right? So I think that there is monopolistic pricing power that is happening, that it does stifle innovation. And I think we need to actually be much more precise about how these companies operate. But I think it's hard because I do think generally regulators don't have enough, they're not sophisticated enough to police the Googles, the Open AIs, the Apples of the world. Like it takes a lot of deep understanding to understand how like the ad system at Google works, right? That is
Right.
not you can't just read a book and I'm like I got it, right?
There's
And
a
I think
big lag between innovation and Washington, D.C. regulators, like
absolutely,
a huge
absolutely,
gap.
yeah,
And that in itself is a problem.
it's a huge problem. And I think the other thing is like if you look at folks in that have been on the cutting edge of this recently, whether it's Zuckerberg or Sam Altman or others, they're saying, please
Yeah.
regulate us, right? But if you actually look at like,
What do you think of that?
I think those guys are very smart and they know that if they're regulated, they're actually going to benefit because they're the incumbent right now. So there's this
Let's pull the ladder up behind me
totally, totally. So I think it
on the
works to
last over the wall.
absolutely it works to their interest, right? They're very savvy business people, and I think
But it's
it would
so
help them.
wrong. It's so wrong. I'm shocked to hear Sam Altman saying it. Like, I watched Sam Altman saying that on TV thinking, you don't really feel this in your bones. I mean,
Yeah, but I
you
think I
can't
think he
always
does.
move to your own advantage. Sometimes you got to do the right thing, man.
But I think I don't know Sam Altman, so far be it for me to speak for him. But I do think that if you're somebody in his seat, there's probably a point of view that OpenAI will really change the world. And if I kind of pull up the ladder behind us, it's going to help me move faster, right? And build the company that will reshape the world in an image I have for the world. And that's the right move, right? Now, I don't necessarily agree with that move, but that's like
I
my vantage
don't.
point. But I can see,
He can just buy all the GPUs coming out of Nvidia
yeah,
and beat the world with his cash that way.
yeah.
But to stop startups that you and I are funding, from competing. Okay,
Yeah.
last thing on closing us out. What do you think about, like, Google bundles? I have Google Workplace, G
Oh,
Suite,
sure.
and so I get Google Meet, but I
Yeah.
still use Zoom.
Yeah.
And Microsoft is bundling
Oh,
Google, or
oh.
you know,
Teams and yeah.
Teams.
Mhm.
Um, how do you feel about that kind of monopolistic, behavior, which can, it's kind of like Chinese making PV photovoltaic cells really cheaply, dumping them on the market until every other PV manufacturer goes bankrupt, and there's one country supplying 100% of PV cells
Oh
and
yeah.
solar panels.
Yep. Yep. And
It's
I
kind
think
of the
that
same thing.
it
It's like the
is. And I think
definition, isn't it?
And I think that's where the problem comes in. If it really does block the innovation, and I mean, we can look this up offline. I believe Microsoft with the Teams thing actually unbundled it with their EU distribution because EU, as you know, as we all know, is much more strict about monopolies and regulation. I think they actually unbundled it for that, right? In
For
that region.
Europe?
I think so. And so, I mean, these companies are very smart, right? And I think that everybody knows there's like these synergies that happen. If I'm all in the Google Workplace ecosystem, there are these like amazing things that happen. In some ways, great, makes me work more efficiently. On the other hand, it just stomps out any kind of innovation, right?
Yeah.
And I think it's amazing that like Zoom, that you and I are having this conversation on Zoom, even though I get Google Hangouts or whatever it's called for free, right?
Yeah, I
And
know. I know. Yeah. I haven't, I've never even tried to use it. I don't know. Let's not get sidetracked between, meets over,
yeah, sure.
their video conferencing over theirs. Like you would think that with all the data center infrastructure, that they can take that open source, like RTL, whatever it is, and make it
Mm,
work better than
yeah.
Zoom. But somehow Zoom is doing things that seem to make it better.
Yeah, I mean, I think that's the whole thing with like I always think about it as like physics of big companies, like Yahoo saw Google. Let's say we go back in the time machine here 20 years ago, right? Like PageRank was cool, but there's a lot of research that showed citation rank is a good way to do search, right? It
Hmm.
wasn't like so novel that the only one person in the world had figured that out, right? And yet Yahoo saw that, yet still, which is way better funded at the time, basically the entry point to the internet for a lot of the world, chose not to go that way, and then eventually got the lunch eaten by Google, right? And
I
that's
mean,
like
they started off that you had to submit your website to Yahoo, and a
great.
human decided, where do I put
Yeah,
this? You
yeah,
know, and then you'd email them and like, hey man, our website's ready. Would you please put it on Yahoo?
yeah, yeah.
And you had to do like there was like Dogpile. You had to search on like three different search
Oh yeah,
engines before
Dogpile.
meeting with a
Remember that?
person. Yeah, like I use Dogpile because if I have like a meeting with you, I'm like, who is this guy? And I better
Yeah.
search him on three different search engines before figuring out, the truth. So that's all pretty wild. And so a lot of people we have a lot of LPs
Mm,
from Google,
yeah.
and a lot of them worked on projects that have never seen the light of day. It's amazing that you were working on like core business things like maps and all of that were like real,
Yeah.
products that people use. That's pretty
Yeah.
awesome. And then did you go straight from Google to Highland Capital Partners,
I did,
HCP?
and I definitely an accident in the sense of life, right? Like I spent most of my 20s at Google. I still love Google to this day, so I'm a Google fanboy. I'm very biased, right? I think in many ways the company generally is right-minded, but I think there's some issues, whatever. But I started to think about what's next. I wasn't as smart as you. I did not go to business school, and I was like, I had a very narrow view of the world, Stanford, Google. So I kind of had this very,
Business school, 2 years of being off, out of the action could
yeah.
be, you could have missed the internet.
Oh,
I
for
was
sure.
kind of doing, I got 15 million in my first year of MBA.
Oh, wow.
So I was working on startups the whole time, but a lot
Amazing.
of people were, it's not a good idea to be, you could miss crypto, you could miss mobile, you could
Oh,
miss
yeah.
cloud, you could miss something.
Yeah.
Just been sitting around looking at five forces model from
I,
Porter.
I do agree with that. I mean, I think business school is amazing, but I also think it does not replace just being in the thick of it,
Yeah.
particularly
I
in
mean,
tech,
yeah. Yeah.
you know?
For me, I was such a poet in undergrad that
Uh-huh.
I was just like studying, German literature and stuff.
Okay.
So like I needed that stuff. Like people were
Got
telling me, dude, you've got to go to an MBA or else this meeting is over. So I,
it.
I needed I needed to get real in the classroom training.
Got it. Got it. I think
So it's useful for me. I find it useful for me. You
no, I think it's
probably
useful
learned
for
it in the real world. That's cool.
I think there are many different ways, right? I think in my journey, it was very much just being it, doing it, being around great people, learning from them kind of thing. And the reason actually I got attracted to venture capital was in part because my eyes were open to like, oh my God, there's so many different businesses in the world. There's so many different ways tech companies can grow, right? I had a very narrow view from what Google was. And then it was like, wow, it's like the first time, I don't know, you go into like the Amazon jungle or something. You're like, wow, there's so many different insects and trees and everything. Everything is so different. And they're like all these different ways to win. all these different models. And I was like, this is amazing. There are many different forms of entrepreneurship. I think that's what got me so addicted, even to this day, with venture capital. I don't think like our peers or people I'm like particularly admire as like my heroes. If you think about the best VCs of all time and that sort of thing, I mean, it's interesting and exciting, but it's not like the same way I admire an entrepreneur, where it's like
Yeah,
a woman
yeah,
or a
yeah,
man
yeah.
just build something, right? And that I think is what got me hooked, because it wasn't just learning about the business, but why this person. Like in my firm, I'm always telling my team here, our founders have to tell us a secret. If we know more than that founder about a market, we should not invest. They have to tell us that unknown, that really deep insight. And that's really important because they spend thousands of hours thinking about that widget, right? We spend maybe a few hours thinking about it. And
Sure.
so I love that. I love that about the job. And then if you think about what happens to that entrepreneur over time, it's like, I think sometimes VCs take too much credit for success of their
Oh
companies,
God, yeah.
you
Like,
know?
look at all the jobs I created. And I'm like,
Totally,
dude, get
right.
that off your website, man. I mean,
Totally.
you're part of the puzzle, but
Yeah,
you're not the shit. I mean, you're
exactly.
not the core of those job creation,
No,
you know.
no, you're part of that journey, but you're not driving the car. You're not
Yeah,
driving the
maybe there would have
bus.
been more jobs had you not been involved,
Right, right. I mean,
It's very possible.
the other thing, we're a small team here of seven. We have some junior people, and the other thing I always tell my team is like, listen more, talk less. Right?
Yeah.
Like, I was surprised when I entered my career in VC, how many VCs would just go off and pontificate about something, and I'm just like, but just be quiet for a second. Everybody read that TechCrunch blog or that Medium post or whatever it
Yeah.
was. Like, why don't we just listen to what the CEO has to say and
Do you know
like
what the antidote
interpret
for
that?
talking too much is
No, what's
running out of
that?
time. Like,
Oh, there.
and so
Yeah,
if you've got like 12 Zooms in a day or
yeah,
meetings in your office in
yeah.
whatever square, you're like, look, I have a whole soliloquy I want to go off on, but you know
Yeah.
what? We don't even know what your operating expenses are, what your revenues are, what the burn rate is, what's the cash balance. I have a lot of questions I got to get to.
Yeah.
And, and then all of a sudden you're asking questions, they're talking, you're talking less, you're
Yeah.
getting smarter. If you talk too much as a VC, you're like a pure idiot.
Yeah. Yeah. I agree. I
Talk
agree.
do some talking after you funded the company.
Yes. Yes. I think it's very much the best people I think in venture are really good listeners, and really hear what the entrepreneur is saying. They may be better communicators in some cases than the CEO, can kind of like synthesize it and reflect it better, but they're just like excellent listeners. And I
Yeah.
also think it's important in venture capital, as in the seats you and I sit in, to say, I don't know sometimes. You don't know the answer, like how could you? But also actually being vulnerable in that way when you talk to a CEO and saying, I don't know either, but you know what? We're going to work it together, right? We can figure this out together. Because sometimes I think VCs kind of give these rules of thumb advice that don't often sort of, sometimes there's importance there, but sometimes I think it's a little too dismissive of like what exactly happening in the moment in time in this company.
So how did you bounce out of Google and into Highland? And I think
Yeah.
Highland is a Boston company, and there's a woman Goldberg that they sent to London, and I think
Yes.
what was her name?
Irina Goldberg.
Yes, 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 yes,
Yeah.
yes, yes. Yeah, she's
She's
great.
brilliant.
Yeah, yeah, I like her. And I think at Highland Capital is like in the 90s, we're trying to do more than just venture. Like they were trying to help you with headhunting, they were trying to help you with this, they're trying to help you with that. So they were
Yeah.
saying, all right, what does the startup need? Can we do that for them in any way? And then you kind of saw Josh Koppelman do it with first round, and then Andreessen just raised so much money. They were like hiring my classmates out of Wall Street, saying, "Oh, you need to sell this company. Let's hire Jamie McGurk," and
Yeah.
that's all he does. So
Yeah.
like so they kind of siloed it and took it to a whole new level. I think after the dot-com crash, guys like Highland had to hit the brakes a little bit. So like some of the stuff that they were rolling out as services to the startups, they pulled back. What year did you join Highland?
So I joined Highland. So well after the dot-com bust, it was 2010. When I
2010. Okay.
All of
So
2010.
so so nuclear winter was long gone in the
Yeah.
rearview mirror. Kind of like by 2006, things were like we're back on in Silicon Valley. And
Yes.
and and they were you how many people did they have in the Bay Area?
Yeah, so the firm had gone through a lot of evolutions. To your point, I think they had pursued a variety of different strategies over time. From Irina, who's brilliant, we overlapped briefly when she was in the U.S. She had actually been one of the founding team members for Highland's European operation,
That's
which is
right. That's right. Yeah, yeah.
still very active today and are growth stage investors in Europe. They also had a great, very successful Chinese group, which has spun out.
Where in
Led by,
China were they?
what's that?
Were they in China?
They were in China. Yeah.
Where in China?
I don't know. It was before it was like we overlapped briefly. I don't actually know where in
Beijing,
China.
Shanghai,
I mean,
Shenzhen.
I'm sure it was either Beijing or Shanghai, but I don't know between the two.
Okay, okay, that's cool. That's cool.
Yeah. But they were doing all different, they were doing healthcare as well. And then also doing what they called consumer, which was kind of, they had invested in Lululemon in the early days. So kind of like CPG kind of brands like David's Tea in Canada, like kind of brick and mortar retail stuff. Right. And so they had a lot of different strategies. Some were very successful. And then my era was very much about refocusing back to their core, which was what they started in the 80s, is like an early stage tech fund. That's what they really wanted to kind of focus on as they kind of branched off and had all these sister funds and sister strategies globally. And so my focus, you rightly said, the core of Highland was in Boston. They were like a premier Boston firm. They were expanding and developing a bigger presence on the West Coast. I was always out on the West Coast, and I had saw kind of that movie play out with Greylock, which was also a legendary Boston firm, and then with David Z and others really created a
But you
foothold
know,
in the Valley.
but a lot of the listeners here won't know this if they're not old enough. But in the '90s, I was in DC. I would fly over New York to get to Boston,
Okay.
where it was the number 2 source of venture capital after the Valley.
Oh yeah.
There was like 20x more money for an early stage pre-revenue or got 5 million, 15 million revenue startup in Boston than there was in all of New York City.
Yep.
And then right at the end of the .com, every banker took off the tie, got a foosball table in Hell's Kitchen and saying, "We're VCs." And then the crash happened, and it was B2B. You know what B2C and B2B meant after the crash? B2B was back to banking where you belong and back to consulting.
Is that right?
B2B, B2C. Right. There was like that blip, but now New York is coming to its own, and
yeah, absolutely.
And Boston is quite. Boston's like tied with Utah right now, I think.
Oh, is that right? I mean, I think
for Boston, tech VC, they'll always be premier for drug discovery, biotech, med tech, but for like non-healthcare life science, I believe by like deal number, deal volume, there's been a big exodus.
Oh, interesting. Yeah. It is funny though how short-term people's memories are, right? Your point of like Route 128, I believe it was like
going through Waltham and all that. Yeah. Winter
You know?
Street Winter Street is there. I think Winter Street on 128 is there Sand Hill.
Okay, yeah. So, even I don't even know that, right?
I had to go there.
It's right. Yeah, right. And it's just funny though to me, like, I mean, maybe I'm an old guy now, how quickly people forget those histories, right? And I love Silicon Valley. I think there's something very special about it, but I also think about, I have a young daughter, she's like 1, and I think about in 20 years, what is Silicon Valley going to be Silicon Valley anymore, right? What happens to like?
Yeah, I mean, we could have a long episode on that, but like for everyone that leaves Silicon Valley, and you probably know a lot of people. Yeah. There is some Japanese corporate deciding, oh, software is actually going to impact my otherwise low-tech business. Yeah. What do I do? Yeah. And they're going to be like, and they're going to open an innovation center, probably in the wrong place, like Santa Clara, but they will, the Bay Area, I don't think housing prices are about to drop off a cliff. Put it that way.
No, they're not. I agree with that. I agree with that. Yeah. I mean, look, I kind of voting with my feet. I live in Silicon Valley. I live in San Francisco. I love it. I love Stanford. I love so much of it. But it is interesting, I think, when these things happen. Like, I don't know if you talked to a VC in 1987, if they would have ever said, for tech venture, Boston won't be the epicenter, right?
Yeah, sure. I mean, they had a critical mass of companies like Digital Deck, it was like half the price of an IBM mainframe and like 10x better. I mean, there was a lot of, I don't know. They have 40 universities, colleges there, MIT and Harvard and
Charles. I mean, it's funny how people often get it wrong too. Like I was reading something recently where like when the cell phone market was developing, AT&T hired McKinsey to basically give us an analysis. How many should we care about this market? Should we be in this market, right? And this is like, McKinsey 25 years ago or 30 years ago, whatever it was, said, no, the global TAM or volume of, we only think there'll be about 1 billion cell phones total or something like that, right? It's not going to be that big, right? And clearly way wrong.
Well, I mean, but that's the thing, is that, like, back then it was like, I remember when I had a mobile phone, I was like, look at me, I'm Bill Gates, I'm like really important person. It's like, where's my, like, I'm the king of France with this
Yeah.
thing.
Yeah.
But then it was like, the average Italian has two of them. He's talking on both at the same time.
Right.
So, but okay. And so from when to when were you at Highland?
So I was at Highland from 2010 till we launched Nava, which was in 2021, 2020, 2021.
Okay. Okay, great. So you're there for a full vintage,
Yeah.
and then you started Nava. And and so fund one, 200 million. Congratulations.
175, 175.
175. Okay, beautiful. That's still a great number. And it's probably a good high performing number too. How did you raise the 175?
Yeah. We bought a lotto ticket. We were lucky enough to win the Super Bowl, no, I was kidding. Like, honestly, raising venture funds is so weird. And I think when we raised it in deep COVID, right? We started our fundraise in 2021, and a lot of it was still on Zoom. If you can kind of remember back then, people weren't going out so much. We had a few in-person meetings, but the world was still pretty closed off in that moment in time. And I would say really all the credit for the fundraise goes to the people we backed in the past. We were really lucky to put some good points on the board historically with our prior portfolio. We were fortunate to meet
in prior portfolio, meaning Highland.
Highland. Yep.
Okay.
We had some good points on the board. We had been good training from the folks at Highland and knew we were really professional investors, had sat on boards, knew what it meant, and had a great spin out story from the firm. We had a lot of people, LPs, that really liked sort of our point of view, where, there's not a lot of funds that really focus only on Series A. Usually as a first.
Okay, so tell us, what is the thesis?
Yeah.
So tell us about Nava Ventures.
Yeah. So we only do Series A investing. Typically, right?
How do you define Series A?
Yeah. So Series A, I think it means many different things, even within our portfolio, right? So we have some Series A companies that were PMF, post product market fit, doing 4 or 5 million in revenue, just cranking. We have other companies that were Series A's that were, 5 great, super smart people that had some momentum, but really pre-product. And so
So how would you define a pre-revenue, pre-product company in Series A?
Yeah. So
just based on the dollar amount of the raise?
No. It's very much around sort of the momentum we saw. This particular company, we were lucky to co-invest along some great people like Sequoia, Ram Shriram, Jerry Yang, and others. And it was a guy that I had overlapped with at Google, brilliant technologist, and the company's still in stealth, but had a really strong point of view on where AI was going. And this was before ChatGPT came out to the world, et cetera. And we were lucky enough to kind of see some of the stuff they had built early on and spent time with the company. And we felt that the momentum they had built from a deep technology perspective merited a Series A investment at that time. And so because that we could then draw that path to like product, right? We could articulate what that was. It wasn't so much just a research project, which I think is very dangerous for VCs to invest in, by the way, of just like professors that are used to doing research and writing papers.
Especially in this industry where like, it's like Brian, they were hiring people for like $1 million salaries. It's terrifying to me.
Yeah. I think that's very dangerous. Once in a while it might work, but I think you're already seeing this, with a lot of the Gen AI companies that were funded, that many people realize that writing papers is very different than shipping product in production. and like they've raised huge amounts of capital off like some pretty lofty dreams, but putting stuff into code is hard, and putting stuff into an enterprise is really hard, right? And I think that you're seeing those companies that were now become kind of zombie Gen AI companies, where it's like very, very smart researchers that can build interesting prototypes, but can't translate that into a production system, right? And then you're seeing them either acqui-hired or kind of pivoting and shifting into a space, which probably ends up becoming an acquisition at some point just for the talent. And I think that the thing we really think about when we do an investment is we try to underwrite things to a $10 billion outcome. So really very much the power law distribution defines the portfolio for us. Hopefully we have 1 to 2 3 winners that really drive all the returns.
So, I mean, this basically happens in. I'm on Fund Four, and so we've
Mhm.
always had a few of these power law
Yeah,
companies, and you get a couple of power law companies, and it puts you like deep into the top 5% of
absolutely.
stuff.
Yeah.
But saying I'm going to get a decacorn out of every investment, if I had to
Oh,
say I'm not going to pull the trigger if I don't have high conviction that this is going to be a decacorn, I probably wouldn't be pulling a lot of trigger.
oh yeah. So
I
I
mean,
think this.
what do you mean?
Yeah,
You're
yeah.
saying you want to see a
It's
decacorn,
it's
but
yeah, it's a great question. So it's like if everything goes perfectly right, could you tell a story of how the market could support a $10 billion size plus company? And we do it in
right,
two lenses. One lens is kind of the quantitative stuff, right? Like multiples, blah, 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 kind of that. The other side of it is actually the narrative, right? This lets you avoid the trap of like, well, Uber is a small market because taxi cabs it's a small market, right? That whole the famous kind of story there. For us, we really like to think about it of like, is there a behavior change that happens? If everybody starts using that widget, it starts taking time of day from them, not just share of wallet, but really time of day, whether it's on the enterprise side or consumer side, it creates a new habit. Could that company become big enough? 10 billion is kind of an arbitrary number, but it's much more about kind of be big enough scale and size. Because if you look at the best companies in the world, and you know this, Andrew, it's the IPO is just an event along the way. There's so much value creation that comes afterwards, right? If you look at like Datadog, Google, et cetera, many of these companies, the IPOs were good. They're very good. But if you had bought in at the IPO, you would have made so much money if you rode it all the way up to kind of the heights they're at now. And
yeah,
so,
yeah. I interviewed Bob Pavey for my first book,
oh yeah.
and he was at More David Out
Mm-hmm.
or God, was it More David Out? And he led the Series B of Apple Computer,
Oh well.
and he sold everything after the lockup of the IPO.
Yeah.
Guess how much they netted of a gain of having done the Series B of this $3 trillion company? $6 million.
Oh my gosh.
That
That's
was
painful.
that probably bought you a sweet pad in Woodside with a pool that is like hard. You got to,
Gosh.
kill Jack Dorsey to buy that house now, but still, that's pretty nuts, isn't it?
It's crazy, and
And
that's where if you're lucky enough to be in, say, one winner in your career that's truly like a power law company, like ride it up, right? If you really do think this is that kind of company that can be like transformational, everybody talks in these kind of big terms, generational, whatever. But like even when I was at Google, I wouldn't have said it's a generational company in the way it has become, right? Because it's just you don't know until you start
oh,
building
come
that.
on, you got to know when your dog is getting dental and they're offering massages and cooking classes, something's going
I
right.
thought it was a cool company, but
You thought
honestly,
they
I
were
didn't
all
think.
like that.
I mean, I didn't know. I was like 22. How would I know?
I don't know. Visit VMware. It's pretty nice, but
Right?
they have some they held back on something. VMware used to brag. I've got LPs in all these places, so we got to take our Japanese LPs somewhere.
Yeah.
And like Parag Patel was like another Patel. Parag Patel is like used to be the head of worldwide sales at VMware, and he's like, hey, and we pay interns more than anybody else in the valley other than Google.
Yeah.
Meaning, like he was proud to be number two.
Yeah. I remember at Google, it was really weird for me when like Yelp was a thing and we had all these food restaurants right on campus, and people started reviewing our restaurants on Yelp. And I used to live in Mountain View, right, where Google was,
Yeah.
and it was so weird. Like,
But I mean, I mean, there's a lot of politics around this. Like, apparently, more meals are served in Mountain View at Google campus than all of Mountain View combined. That is a fact. It is a
I
fact.
believe it. I
And so, like,
believe
the mayor of Mountain View is
it.
like, dude, I'm like Tony Soprano. Give me some of this.
Yeah.
Literally, it's
Yeah.
like messed up.
Yeah. I
But I
mean,
don't know.
I think for all
Lunch
that
at
for
lunch
me,
at Yahoo is pretty hard to beat. Have you ever had lunch at Yahoo?
not in a long time. Or I guess I went over there once or twice in my career, but it's been ages. Yeah.
All right.
Yeah. I remember
Okay.
lunch at Apple, I had to pay for it. I was like, oh, you have to pay for lunch here. Yeah.
Yeah, that's there's something wrong
At
with
least
that.
back in the day. Who knows today, right?
Yeah,
But
isn't JP Morgan like people say there's no such thing as free lunch in this world other than working at JP Morgan. And then I think they finally got rid of the free lunch at JPM.
oh, is that right? That's
Well, I
funny.
remember they did. Maybe they brought it back, but that was an expression in New York. There's no such thing as a free lunch in this world
Oh, is that
unless you
right?
work at JP Morgan.
But the funny thing is, it's like, yeah, you have all these great amenities and all this stuff, but it's just a sign of how truly profitable these companies are, right? If
That's
you
it.
can
Yeah,
do
obviously.
all this stuff for your employees, laundry, massages, blah, 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 it's such a like minuscule amount of money relative to the money that these products are bringing in. It's pretty incredible, right? And that's,
So I think we landed back in this tangent over decacorn
oh,
companies
yeah.
and how you're defining Series A. So your Series A is quite broad that it could be a 4xing year-on-year revenue or 0 to 1 million, and then it's got 5 million
Yeah,
ARR.
we don't have those metrics like the metric, the Iconic or Bessemer or these guys that publish like here's the SaaS metrics. We think, hey, that's a lens to look at, but it's not the lens to look at, right? And that's actually one of the things I think that's important about how we operate as a firm. We think that oftentimes investment committees can become echo chambers where partners are just selling their deals. Everything's A plus, everything's great. I just want to do this deal, right? What we like to do within our IC investment committee is really have like different opinions, right? If a partner really wants to do a deal, great, but let's talk about the good things and the warts, right? Because there's no perfect Series A deal. There's 10 reasons to do it and 10 reasons not to do it. The important thing is going in with knowing like, hey, here are the 30 problem areas that you should be thinking about. I think when people don't do that, you end up with suboptimal decision making. And that's one of the things I hope I can preserve as we kind of evolve as a firm. Because most of my friends, in being platform funds, having been at a big platform fund, if you ask them what's the most painful night of your week, it'll be Sunday night before my Monday morning IC, right? I hate going to my IC. I love our IC because there's actually the
How,
intellectual
how many people
discourse
are
to
on your
think.
IC now?
So we have a team of 5 on the investment team, and the my partner and co-founder Freddie, he and I are the partners on the IC.
Okay. So at the end of the day, it's 2 votes,
That's
and you
right.
need you need consensus.
We drive by consensus. I think that I will say though, even our most junior team member, who's 23 years old, I love her hot takes and opinions. Right? If she's
Sure.
really negative on a
It's like a board,
deal,
it's like an active board observer. She's
it
there,
is.
she's
It is.
talking, she's influencing, people are listening.
Absolutely, absolutely. So, and I think that's important because we want people to feel uncomfortable when they do deals in the sense of like, it's not about the money as much as like, you're going to be working with this company for the next 10 years or more. Is that the right allocation of your time? Is this something that you really think could do well by our LPs and return the fund? Is this a company you think that, lives within our value system that could really impact the world in a meaningful way? And I think that's the thing that's really important in early stage venture. I think there's a lot of different ways to win. You could do the Ron Conway SV Angel kind of spray and pray, which does work, right? But I think for Series A, I think it's hard to do a spray and pray approach. I think it's really
Yeah.
important to have high conviction bets.
So what's the portfolio construction with this
Yeah.
Series A fund? You invest Series A and do you follow on afterwards?
Yeah. So the portfolio is fund size 175 million. Going to do 15-ish deals in that fund, plus or minus. So pretty high conviction, high concentrated bets, right?
Yeah,
When we
that's old
invest,
school.
it is old school. When we invest, we it's important that a company has at least 2 years of runway, if not more, because we really think it's important for a company to take time, build, and like break the right foundation to go to the next stage. We've also, I think one of the things in venture that's important to highlight is that so many companies almost can will their way to like a 10 million ARR because they have a great sales oriented CEO, et cetera. But then the wheels come off. What we love to focus on at Series A is building the foundation that lets you get to a flywheel effect. That's what we think the art of it is, because that's how you get to the big outcomes. The portfolio itself is we've done our first 13 deals now, leading or co-leading. We like to take active roles in board seats. We don't have to. We are generalists, but are very thesis driven in how we operate. So we think it's really important to have strong points of view on the world. We spend a lot of time thinking about that, talking to people in industry, learning about it, etc.
Okay. And what kind of reserves do you hold back?
Yeah.
And what's your philosophy on, you know, allocating money to your winners and not the ones that are not doing
Yeah,
well.
it's important. So this is also old school, right? If you go back to kind of Kleiner Perkins in the day, they got the majority of their ownership on the first investment, and they didn't do follow on, right? They were going to get 30% plus in that early stage investing, and I think there's a lot of beauty to that approach. For us, we make it known to the entrepreneur that follow on is not a given, and in venture, so much, what's the expression? So much good capital has gone after bad for protection
Yeah.
of capital. These silly excuses, right? I also think it does a disservice to the entrepreneur because it kind of kicks the can on the hard conversation, where you can tell somebody early on, hey, you have 2 years of runway. After we invest, we tell companies we did a ton of diligence on you. Here's all the things we hated about the company, but we love
Uh,
this. We have that honest conversation because then you're actually like, okay, management team, you have time to course correct and fix. I hate it when VCs come in and the company's got 6 months of runway and they're like, well, this wasn't working for a long time, this and that. It's like, well, why didn't you tell me if the
yeah,
CEO
yeah.
told me?
Communication is good in a marriage. It's good in the VC partner,
Always good.
VC startup partnership. You gotta disclose stuff and then leave ample time. We like the idea of like fund them for a 24-month runway.
Yeah.
And then when we're a year in, we hopefully 4x or better revenues. But
Yeah.
even if we didn't 2x, it's time to kick off that next fundraising process.
Yeah.
And that way you like maybe you raise in a few weeks, maybe it takes two quarters
Yeah.
and you still had 6 months cash in the bank and you're not freaking out
Yeah.
and then
I think
having conversations about reducing costs. I think halfway in is a good time to say, do we need to lower costs? Do we need to change strategy? We got a year of cash left in the bank. How are we
yeah.
doing here?
Yeah, absolutely. I mean, I think one of the jobs of a good board member is to help the CEO create context and clarity, like understand what's happening around you, right? How you see the world shifting. And then having them understand like you said, you have 12 months of runway. This is not working, right? Here are the two things that are. What could we do? Where could you
Yeah.
take the opportunity?
And that's time. That I mean, in Silicon Valley startup world, that's like years of time. It's like 12 months of time. That's time. 3 months time, not good. 6 months time, scary.
Yeah,
And we can disagree for a few minutes and come out of here in a week or so, really all marching in the same direction with
yeah.
what we're gonna do. And so you're like 12 into a potential 15 portfolio. Okay, so 2021, 22, 23. That makes sense. And are what are your thoughts on raising fund two?
Yeah, so we are in the process of doing that. I probably can't talk about it too much because
Yeah,
we're
you
in the
can't talk too
process
much
of
about
doing
it,
it. But
but
yeah, yeah,
but it's about there will be a fund two,
there
and
is.
okay, and you've
Yes.
got two more shots in the chamber
Yeah,
to
yeah,
smooth out this 15.
that's
And
right.
geographically, are you SF Bay area only, or are you open to
No,
investing all over the
so
country?
so the
Or
team, the our office is in Jackson Square in downtown SF. We also have a small
beautiful.
footprint in New
That's
York.
still a nice part of San Francisco, where like other parts are getting a little smellier. That's nice.
It is, it is. I mean, I love the
All the
brick
brick, me
on
too.
that.
Yeah,
I love
yeah.
that.
I would
Um,
almost guess I knew where you were just from looking at that
The
background.
brick, yeah, yeah. I love this part of the city as well. But and we also have a small footprint in New York. But we invest in North America. Basically, US is kind of our focus. You know,
Canada?
we will look at stuff in Canada. Absolutely, absolutely. So I
Yeah.
spent a lot of time in. I've been fortunate to do a lot of mentorship at University of Toronto, and they have some a pretty amazing AI ML talent.
Yeah,
And
I've spoken there. Like the was it Rothmans or Rotmans
yeah,
business
exactly.
school?
Yeah, that's the program, the Creative Destruction Lab, which I think is a great program,
Yeah.
run really well. I think there's a lot of great talent that we do look at that. So we
Yeah,
we
we
definitely
love
look at this.
Canada. I mean, their shred program, their like tax credit
Mm.
program gives
Oh
you
yeah,
70% of the salary and any other expense you can
oh it's
possibly
great.
throw in there. And they
Yeah,
get it in cash. You file your tax return, they wire you money.
oh it's
It's
great. I
unbelievable.
mean, I would love more
You
of
don't
that
get
stuff
Q
here.
you don't yeah, you're never going to get it here. You don't get QSBS. So you don't
Yeah.
get QSBS obviously for funding a Canadian company, even if you bring them down
Hmm.
after. But and do you know Palantir has hired more engineers out of Waterloo, Canada, than any other single
Is that right?
university?
I mean,
Yeah,
that's a
like
brilliant school, though. My first exposure to Waterloo was when I was at Google, and they had a co-op program, and there'd be these amazing engineers, and I'd be like, "Oh, where'd you go to school?" In my
Waterloo,
naive
Waterloo,
way,
Waterloo,
thinking
Waterloo.
MIT, Stanford, or something. It's like, "Oh, Waterloo." I was like, "Where's Waterloo?" And
Yeah,
then I was like,
yeah,
"Wow, this is an amazing program. Yeah, really smart people."
yeah. That's interesting. Yeah. Okay, and so in wrapping up, geography, we got it. Stage, we've got. It sounds like you're quite broad-minded on
Yeah,
what a Series A is.
absolutely.
And as far as thesis, are there things that you stay away from, or is there like a top three things? Like we have
Yeah.
stuff that we really like that we call on thesis, but if you show us a deal that is like looking magical, we could easily get brought into something that someone
Yeah.
like you bring to us. What is your thought on sector focus?
Yeah, well, I mean, I think it's about having strong points of view. So there's like, 4 to 6 theses we're always working and developing. We're kind of pre-existing, like, like enterprise AI, data, digital healthcare infrastructure. We're like, we have exposure to these spaces. We want to continue to build a portfolio there. But then there's things that are opportunistic where it's like, hey, something that we didn't think about last year is developing as an area. So let's build up a point of view there. Absolutely. But there's areas we don't invest. So for example, we wouldn't do things like medical devices or
Drug
hardcore
discovery,
bio.
biotech.
Yeah, yeah. Things where it's probably you have to be a PhD to even be in the conversation is probably not a deal, that we
Yeah.
want to look at, right?
And what you'd said, we want to do a lot of due diligence or develop a
Yeah.
strong point of view because this could be a 10-year relationship. What do you view as the time delay between Series A cash out of your bank account and into that of the startup and a definitive liquidity event for the company? So not a secondary, but like IPO, M&A. What's the time delay as we record in August of 2024, end of August?
Yeah. I
This might
mean,
get published in September.
that's great. I would probably say, from a liquidity event, it's really probably 10 plus years. I think it's getting from the IPO. If I'm thinking about an IPO liquidity event, our fund life is 10 years. Our active investment period is about 5 years, and usually deployed majority of the first deals are usually in a 3 year period, right? But I think IPOs are getting harder and harder. Companies are having to grow to such giant scale to be public companies. There's far less. Actually, Jamie Dimon in his annual letter wrote like this great analysis of how there are far fewer public companies today than like 20 years ago, right? And I
Yeah,
think
they have to
that
cross over to us because
yeah,
they have a shrinking set of stocks to even look at as,
absolutely.
publicly traded
Yeah,
investments.
so I think it's a long hold period. Now, along the way, I think the ecosystem has developed where there's great secondary opportunities where you could be, raising money at a $5 billion valuation that some of the people that have been on a journey could get off the train a little bit along the way.
Do you guys plan on or do you sell on secondary market some of your early
We
stage?
have not historically, but I definitely think that it's important as a VC to be aware of the ecosystem and how it's evolving, right? Because you don't want to be holding something for 20 years if that's how long, if you have a 10-year fund cycle, right? Even if that's a decision that you'd have to discuss to your LPs and have a conversation about it, right?
Yeah.
And I think being aware of how the ecosystem is shifting, but we aren't opposed to it, but it's also we don't want to be penny wise, pound foolish, right? If you really do think that it's going to be a true $10 billion scale big company, think about how long that's going to take. Is that a better outcome or not, right? The other thing that's important for us is we're not public stock pickers. So when we do, if we're fortunate to have IPOs and that stock, we don't want to decide exactly when to distribute and hold. Is it a 5 year hold? That's the LP. There's somebody else in that team that's underwriting that. That's their job. We want to give you that stock, and then you can decide when you want to sell it or not, right?
Okay, so yeah, like if I know numerous people that were LPs in Ron Conway's SV Angel
Hmm.
fund that hit Google,
Yeah,
and the absolute cash on cash of the fund was not so great if you had sold your Google stock.
yeah,
But these people brag about I've got Google stock at a cost basis of like nothing, and I
yeah,
still have it, and I sell some whenever I need it.
yeah,
So it's amazing. Distributing stock can be the right thing to do. And
yeah.
sometimes, what kind of DPI do you need to raise the next fund has a little bit to do sometimes with the cross section of what do your LPs look like? Are they endowments and pension funds? I mean, if you're kind of like spun out of HCP, Highland Capital Partners, they might be sort of endowments, pension funds,
Yeah, I
kind of
mean,
MFOs. What is like an example of some of your LPs and what's their attitude to show me DPI before I give you more money?
yeah, I mean, I think there are a variety of different ones, in the kind of ecosystem. And I think the thing that's interesting right now is I think the new trend maybe that's worth double clicking into there in terms of thinking about LP bases is there's been this rise of institutional scale family offices because there's been so much wealth creation that actually operate like an endowment would. right? Because they have generated so much wealth, they have longer term hold periods, right? And they understand that there's opportunity there. And like, 10, 15 years ago, I don't think that base existed in the same way. And I think actually that's really good because I think for a lot of the endowments that are out there, they're always looking to add maybe 1 to 2 managers, but there's already been a full slate of folks, right? They're already in the Sequoias, the Benchmarks, Excels of the world,
Yeah.
right? And so it's kind of like, okay, am I getting different exposure, or are there new different kind of deep pools of capital that want exposure to sort of a venture asset? So when
Right.
I think about like the future of venture and where the most interesting things are happening, endowments will always play a role, but I do think there are other pockets of very sophisticated capital that want exposure to this asset class, which I think generally is a good thing.
Yeah. 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 I think that venture in some ways is very underfunded, and
I
these
agree.
other assets are very overfunded, and venture is far less risky than the average civilian believes. Like
I agree.
investing in the stock market, that's risky as crazy. Everything's outside of your control.
Totally.
Whereas
Totally.
if you go through your process, build 15 companies, the way it just feels a lot safer to me. But that's obviously my perspective, and I'm not so good at picking stocks, that's for sure.
Totally. Well, we're both
We're,
biased, aren't we?
yeah, yeah, just a
We're
little
both
bit
kind of
on
on
my
the
side.
VC side of
Yeah,
it.
right. So, Manish, anything else you want to say on Nava Ventures before we wrap up?
This has been wonderful. Folks can always find us at www.navanava.vc and email me at Manish, Manish, at nava.vc. We're always happy to chat with folks, and we love doing Series A's.
Okay, cool. And I'll put all this in the show notes. And great spending time with you, man. I can't wait to see you hopefully in a few weeks in San Francisco.
Yeah, same, Andrew. All right, take care and stay cool in Austin.
Okay, Manish, bye for now.
Take care.